Hello and welcome everyone to Gold Asset of the Day for the 2nd of February 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So firstly, as we head into a new month here, what do you need to be aware of? Well, hedge funds and money managers in the last week, they have increased their overall net long position on gold by 7%. So of those hedge funds that currently have a position on the metals, 78% are currently long the gold market. And with that, at the beginning of the week, we saw that usual slingshot move higher as we've moved into a new month with fresh capital coming into the market, with gold breaking back above 1,800 US dollars per ounce. As we talked you through on the week ahead commodity report, we used that opportunity last week after the 700-point sell-off that we saw from the FOMC statement to build further positions on gold on Friday after we already had that corrective move to the downside, anticipating fresh inflows as we move into the month of February. So far this week, we've actually banked 430 points here on gold and over 200 points on copper. So essentially over 630 points profit just in the first couple of days of the month. So of course, for every one lot that you would be trading, that's 6,300 US dollars of profit. For every 10 lot contract, that's $63,000 of profit. And of course, last week we had a windfall amount of profit, banking not only platinum, but also the energies as well for over 8,000 points profit, which essentially meant that we locked in over 20,000 points over the month of January with our clients, with many of them achieving 6 and 7 figures on their portfolios. Now with that, what can we expect here for the rest of the week? So at the moment, I'm looking for resistance to be coming in here on gold between 1,810 up towards 1,820 US dollars per ounce, with a view that we could get a further pullback later on this week, taking the price back down again towards 1780 and 1770 if we see the usual post-European Central Bank sell-off leading into Friday's non-farm payroll data as well. You have to remember there's a lot going on this week. On Wednesday, we have the OPEC meeting, which will provide some great volatility on the oil market for you to capitalize on. Then on Thursday, we have the Bank of England. Later in the day, we have the European Central Bank. And then on Friday, we have non-farm payroll data. So it's going to be back-to-back volatility and trading opportunities with this. Now, typically, as with the FOMC statement, you can often see outflows later on in the week after a major central bank news item like the European Central Bank. I would definitely look out for that, particularly if we've had a strong move at the beginning of the week for the metals, which could again get faded later on during the week, giving you essentially opportunities yet again to pick up the metals at lower prices if we do see that corrective price action. What we've seen in the last week, as we talked you through, is many markets have exploded to the upside. So palladium have broken out over 27% over the month of January. We've got energy prices up over 16%. Lithium prices in the last year up over 400%. Last week we had aluminium prices breaking out to all-time highs, nickel prices breaking out to 10-year highs, and alongside that we have platinum prices breaking out to 2-month highs. This is where you want to be utilizing a research-driven approach to the market. Ditch those technical analysis strategies and indicators. As you know, technical analysis does not work. If you're only using technical analysis, you will get crushed, you'll get chopped up all the time, and you won't be consistent and you won't make any money. So with that, we want to make sure that you are utilizing the right approach to the market, utilizing data, statistics, market intelligence. Alongside that, learning the daily, the weekly, the monthly, the quarterly cycles for each commodity. Alongside that, learning the intermarket correlations, the ratios in the market, understanding fundamentals, the macroeconomics, the geopolitics, key areas of liquidity, capital flows in the market. Further compound that with how the hedge funds, money managers, banks and institutions are positioned in real time. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.